Hey everyone, let me start with the shout out to Joseph Fletcher who requested a video on Ford stock. So I already had a Ford stock video in the works that I was planning, and given the request, I thought I'd expedite the recording of this video. So what I'm going to do in this video is answer where I think Ford stock will be in 2 years. Now, the company has had a good profit and sales growth in the last couple of years, but that could change going forward. So let's look at Ford's prospects over the next few years, and let me answer my best guess for where I think Ford stock could be. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. All right, so to make this prediction, I need several numbers from Ford, starting with its current stock price, which is at $11.53. As you can see, it's fluctuated up and down in the last year, mostly down in terms of the stock price, although that's been different than its actual prospects, and I'm going to show you that in a little bit as well. I also need Ford's earnings per share expectations for 2025, and that's this figure here, $1.73. Interestingly, this is the consensus Wall Street analyst target from those Wall Street analysts that are following Ford stock. And Wall Street thinks Ford's earnings are going to fall over the next 2 years. In 2023, they think it's going to come in at $1.87. 2024, they expect it will fall to $1.75, and 2025, they expect it will fall to $1.73. Again, this is because 2023, 2022 has been really good years for car companies, non-EV car companies especially, because the supply constraints have allowed these car companies like Ford to produce and manufacture only the most profitable models. And so they've been able to sell the most profitable models, offering few, if any, incentives. I'm sure if you went to a dealership in 2022, 2021, maybe early parts of 2023, you were quoted prices that were above the sticker price from dealerships. I know I was. I made some phone calls inquiring about some vehicles in 2021, in 2022, and in early 2023, and I was quoted prices above the sticker price, above the MSRP. Now, that's rare when you're looking at car companies, right? Typically, you can negotiate a price down at a dealership. If MSRP is $30,000, you can typically negotiate that price down by several thousand. That hasn't been the case lately, and that's been really good news for car companies. That's going to change. Supply is increasing. Those shortages, including semiconductor components that limited supply, those are mostly in the rearview mirror. Car companies now are ramping up production, supply is increasing, and to make matters worse, there's a whole bunch of new car companies that are increasing supply as well. The EV companies, think of Tesla, NIO, Rivian, Lucid, Fisker, and others. This is all thousands and thousands of units of supply increase that's coming onto the market, and it's not like legacy car companies have shut down and taken down their manufacturing facilities. Those facilities still exist as well. So now just the capacity, the total capacity manufacturing supply has grown significantly, while demand has not grown all that significantly. The reason car companies have done really well in the last couple of years is because supply was constrained, not because demand was growing above average. And so you can see Ford, it operates in 3 segments, right? Ford Blue is its legacy segment. Year to date in 2023, this is not including the fourth quarter yet, $6.6 billion in operating income, $6.6 billion in operating profit for the Ford legacy segment. And then its professional segment, where it sells its cars to professionals, $5.4 billion in operating income with an operating profit margin of 12.7%. These operating profit margins are better than what Tesla delivered in its latest quarter. Better than Tesla, and Tesla is trading at nearly 5-6 times the valuation of Ford. The area it's struggling is the Model E, the electric vehicle segment, where it's investing billions of dollars to increase supply of electric vehicles. That segment lost 3.1 billion so far this year. Thankfully, Ford has said that it's decreasing output, decreasing the increase in output in this segment because it's just not in high demand right now. It's just not. The supply of electric vehicles have grown way more than demand has grown. And so companies like Ford and GM and some others have said, you know what, we're going to kind of slow things down there and we're going to shift our resources towards these legacy ICE models because they are doing extremely well, better than ever before in terms of profitability and profit margins. Okay, so I also need Ford's price to earnings ratio. Currently, it's trading at a PE of 7.533. Okay, so if I bring together its 7.533 price to earnings ratio along with its EPS estimate for 2025, I'm going to change this on the fly, it will achieve a stock price of $13.03 in 2025. Now, that would be a solid increase from the $11.53 Ford stock is currently trading at. Remember, when you're investing in Ford stock, you should not be expecting the price to double over a couple of years. If you get a stock price increase of this magnitude combined with the dividend, you should be relatively pleased with that return. This isn't a fast-growing company, so you should not expect phenomenal gains from Ford stock. Now, if the price to earnings was to increase to 9, let's say Ford delivers excellent growth in the EV segment and those returns are better than expected and it does a better job gaining market share in that segment where it's not doing as well as we saw, and investors are willing to pay a higher price to earnings for Ford stock, that could increase the stock price to $15.57, which would be really good for Ford stock investors. If things get worse, however, and the PE falls to 6, the stock price could fall to $10.38. That would be a decrease of more than 10% there. Or if things get really bad and the PE falls to 5, the stock price could fall to $8.65. So with Ford, you're getting limited upside in terms of where the stock price could increase to. There's a lot of downside because things could get worse in a hurry. Supply is cyclical with these car companies, right? There is no telling how much supply will increase from its rivals. They've already got the manufacturing facilities set up, so they might feel like their only choice is to increase supply because it's still on a variable cost basis. It's still profitable to increase supply, even though overall it may not be profitable. So this is one of the reasons why overall, the car industry has not been my favorite industry to invest in. In fact, it's been one of my least favorite industries to invest in. If I was to guess, if I was to give my estimate of which one of these scenarios is most likely for Ford stock, I would say somewhere between the PE of 6 and 7.53. And I would say the stock price will be somewhere between $12.25 to $12.75 2 years from now. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.